everyone, welcome to another video. So in this video, we'll try and understand the implications of GST on corporate guarantee. Well, at first, let's understand the concept of a corporate guarantee. In this particular example, you have a holding company or the parent company. You have the subsidiary company or the daughter company. Let's say a subsidiary company wants a loan of rupees 100 crores for its business, and it does not have much of collateral or security to show the bank for the loan it takes. So it approaches the holding company and requests the holding company to give a corporate guarantee to the bank for rupees 100 crores, which is like a promise given to the bank that in case the primary borrower or the subsidiary company defaults, then the holding company will service this particular debt of rupees 100 crores. So this corporate guarantee is basically given by the parent company on behalf of the primary borrower, being the subsidiary company. So therefore, in this particular example, the ultimate question is whether the corporate guarantee service is being provided by the holding company to the subsidiary company. Actually, this corporate guarantee is given to the bank, but the service of corporate guarantee given by the holding company to the subsidiary company, whether that will be chargeable to GST, or in the first place, whether that will be a taxable supply at all. Well, at the 52nd GST Council meeting, a lot of clarifications were brought out with respect to the implications of GST on corporate guarantee, whether GST will be applicable. If applicable, then what will be the value that should be calculated to levy GST. So therefore, after the council meeting was held, there was initially a notification which was brought about in 2023, followed by a particular circular. What the circular clarified was that whether the transaction between this holding company and the subsidiary company for corporate guarantee services would it amount to a taxable supply, or would it be a taxable transaction to GST in the first place? And if so, the notification provided more clarity as to what should be the value of that particular transaction, after which you can apply the whatever GST rate and then find out the GST liability. So talking about the circular first, what the circular said was that corporate guarantee services given by the holding company to subsidiary company is actually a taxable supply of services. Schedule 1 is referred to under the GST Act, and as per Schedule 1, all the entries in Schedule 1 are basically those entries where there is no consideration involved. And one particular entry in Schedule 1 is basically talking about a transaction between related persons. The holding company and the subsidiary company are basically related parties or related persons. There is no actual flow of consideration from the subsidiary company to the holding company for corporate guarantee services. The holding company just gives a corporate guarantee to the bank of rupees 100 crores for a loan that is to be taken by the subsidiary company for an equal amount. So there is no consideration. These two are related parties, and therefore that will be termed as a taxable supply of services as per Schedule 1. And therefore GST will be leviable on this particular transaction. The normal rate, since it's a supply of services, the normal rate of GST, like in all services, will be at 18%, and GST will be levied at the initial time when the holding company gives a corporate guarantee in the first place itself. On that particular transaction, GST will be levied at 18% on the value. Now the next question is, what should be the value of this particular transaction? The value of supply. So the notification clarified and provided that the value should be as per Rule 28 sub Rule 2. Basically, the transaction of corporate guarantee services between the holding company and the subsidiary company should be as per Rule 28.2, which says that it should be higher of the following. Higher of what? 1% of the corporate guarantee amount offered per annum, or the actual consideration flowing, whichever is higher. So for a corporate guarantee given by the holding company to the bank for the loan taken from the bank by the subsidiary company, the corporate guarantee services provided by the holding company to the subsidiary company, the value for that would be either 1% of the corporate guarantee value offered per annum, or actual consideration, if at all there's some consideration flowing, whichever is higher. So if the holding company is giving, for example, a corporate guarantee for 5 years, let's say of 1 crore or whatever the amount is, then the calculation would basically be 1% per annum for 5 years. So 5% would be the rate that will be applied on the corporate guarantee value offered, or actual consideration, whichever is higher. So it is per annum, it is not a one-time thing. 1% per annum, because the corporate guarantee could be for 5 years, 10 years, 15 years. Whatever is the number of years into 1%, that will be the total percentage to be applied to find out the value of that particular transaction or corporate guarantee services. Some more clarifications provided. Rule 28(2) will only be applicable when the receiving company or the subsidiary company or the primary borrower who takes the loan of 100 crores and on whose behalf the holding company gives a corporate guarantee is in India. So if the receiving company is outside India and the holding company is in India, it will tantamount to an export of services, and for export of services, Rule 28(2) will never be applicable, is what the clarification has brought about. Well, this video was just to understand A, the provision of corporate guarantee services by the holding company to the subsidiary company is termed as a taxable supply, where GST is levied and it is a taxable supply of services. The circular for the notification further clarified that once it's a taxable supply of services, the value should be as per Rule 28(2), which should be higher of the 1% of the corporate guarantee value offered per annum or actual consideration, whichever is higher. So if a corporate guarantee is given for 10 years, it will be 10% into the corporate guarantee value offered, levied at the initial stage itself. Well, I hope I was able to make things clear in this particular video. If you like the video, you could show support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.